comes after the reporting period. Okay. So first of all, we need to know do you know what is reporting period? The reporting period is a period which starts, we can say it's a period of 12 months, first of foremost. So it's a period of 12 months starting on basically in Europe or UK, we know they follow this calendar year for reporting period. So it starts on 1st of January and ends on 31st of December. Okay. So that is about reporting period. Now, the name of the lesson is events after the reporting period. So, like whatever is happening between this 12 months period is definitely recorded in our financial statements. Okay. But what about those events? And one more thing I need to explain here. We prepare financial statements for this reporting period. Okay. So for reporting period, financial statements are prepared. But it will take some time to finalize this financial statements. Okay. So suppose reporting period is ending on 31st of December and we are finalizing the account on the 5th of March. That means the members or the shareholders, they will get account of the reporting period on this 5th of March. Okay. So from 1st January of the very next day of after the end of the reporting period. So from that particular period till 4th of March, if any important event is happening, okay, then that is to be noted down in the annual report. On 5th of March, along with the accounts, we will provide an annual report also. In annual report, various other things are provided like the CSR report, corporate social responsibility report, then report of corporate governance, okay, then chairman's speech, then board of directors report. So all this forms part of annual report. So along with this, we have to provide or we have to give details of anything important which has happened between 1st of Jan till 4th of March. Okay. Now, we will know about certain definition in this lesson. So basically, first of all, we have to know what is an event. Okay. So event can be, we can say anything which is happening. Okay. Now, event can be favorable, event can be unfavorable also, which occurs between the end of the reporting period. As I said, end of the reporting period is, we can say 31st of December, as we have taken in our example. From that particular date and the date when the financial statements are authorized for issue. So we have decided a date that is on 5th of March. So in between any event has happened that is to be reported, be it favorable, be it unfavorable. Okay. So basically classified into two types, adjusting event and non-adjusting events. Now, what we know about adjusting events? Events which provide evidence of conditions which existed at the end of reporting period. That means they have a link with the reporting period. Somewhere they were in existence in between the reporting period. Okay, like resolution of a court case. So definitely court case, we know that doesn't happen at the end of the year. We suppose we'll take example, we were involved in this court case way before the end of the reporting period, but that court case got resolved say after 31st of December. So again here we'll take one date, suppose that court case got resolved on the 30th of January. So it is a very important event which has happened for the company and that requires recognition or that is to be informed to the members of the company. So somewhere we can say there was an existence of this particular court case in the reporting period. Likewise, another example is bankruptcy of a major customer. So we know customer is there in existence before the end of the reporting period also. Suddenly, after the end of the reporting period, this customer has gone bankrupt. Okay. Do you know the meaning of bankrupt?
Yes, ma'am.
So the particular customer has become insolvent. Now he is unable to make any kind of payments because his bank account, everything got seized. Okay. So that is a major thing which needs to be informed to the other shareholders. Then evidence of NRV of inventories. What is NRV? NRV is net realizable value. So net realizable value can be more than the cost, less than the cost. Okay. Basically, this comes for inventory. This word comes for inventory. And for inventory, there's a rule that inventory should be valued at lower of cost or NRV. That means cost or NRV, whichever is less, that value is to be taken for closing inventory. Okay. So we have to provide an evidence that the NRV of inventory is this. Then discovery of fraud or errors that show the financial statements were incorrect. Suddenly out of something we got to know that we have committed an error, and some intentional errors will be termed as fraud. Okay. So either it is an error or a fraud that has been discovered, that has been found. And definitely if there is error or fraud, the financial statements will be incorrect. Okay. So these are certain examples of adjusting event. Now we'll take the examples of non-adjusting event. So non-adjusting event doesn't have any relation with the reporting period. They have occurred after the end of the reporting period. For example, we can say destruction of some major asset because of some natural calamity, be it flood, fire, okay, cyclone, okay, typhoon, anything. Major share transactions. So major share transaction which has happened, like some shareholder, or we can say an investor has purchased a huge amount of shares or has sold. It can be either a purchase or a sale. Okay. So has purchased or has sold a major chunk of shares. So that is also something which is non-adjusting because that has happened after the reporting period and has no link with the reporting period. Then comes announcement of a plan to close part of a business. Suppose the business which we are talking about is diversified. That means they are into various kind of business activity. So they have thought of shutting down one of the activity and they have announced for it. And that has happened after the reporting period. So that will also be termed as non-adjusting event. So we have gone through examples of adjusting and non-adjusting event. Now we'll check the accounting treatment. So how these adjusting events are going to affect our account? They will change the amount. We have to change the amount in the financial statement. Why? Because they have a link or some kind of event existed in between the reporting period also now. So definitely we have to change the amounts which are appearing in the financial statement. For non-adjusting event, no change is to be required, but disclosure is required. Simply we have to provide information about this non-adjusting event as a note in the financial statement. So here the amounts are changing. Here only disclosure is sufficient. Now, dividends proposed or declared after the end of the reporting period, but before the financial statements are approved, should be disclosed in a note to financial statement. See, for dividend, this how much dividend is to be paid, that is decided before finalization of financial statement. Okay, but still it needs to be disclosed in a notes to financial statement. Why? Because dividend is proposed by board of directors. Okay, but it is approved by members, or we can say shareholders of the company. Okay. So a non-adjusting event that affect going concern becomes an adjusting event. Now, going concern is a very important convention with regard to financial statements or with regard to business entity. So a non-adjusting event that affects going concern convention becomes an adjusting event. Okay. Now, non-adjusting event, one activity is given. Which of the following events after the reporting period would normally qualify as a non-adjusting event? First, a fall in the market price of shares held by the entity as investment. 1 second. So here one example is given, or only one activity is given for our understanding of what qualifies as adjusting event and what qualifies as non-adjusting event. Okay, so first thing is a fall in the market price of shares held by the entity as investment. One second. Next, insolvency of a trade receivable with a balance of 200,000 outstanding. One second.
हमारे वाला दूध को बोलते ना आपको बहुत दे देता था दे देता सुबह आपको काम आ जाता आराम से डेली लाता ना.
So first thing is a fall in the market price of shares held by the entity as investment. So this is a kind of, we can say, can you tell me whether it is an adjusting event or non-adjusting event?
लाला रो रही है बस सता रही है.
Yeah, it is a non-adjusting event. Why it is a non-adjusting event? Definitely the market price of share that is going to change on a daily basis, okay, on a regular basis. So definitely that doesn't have any existence with regard to the reporting period, okay. Second, insolvency of a trade receivable with a balance of $200,000 outstanding at the end of the reporting period. What is this event? Adjusting or non-adjusting?
Adjusting.
Yes, so this is adjusting event because we are talking about a customer who has gone bankrupt. Okay. Declaration of year-end dividends by director.
Not sure about this.
Declaration of year-end dividend by directors. See, this is also termed as, this will also be termed as non-adjusting event. As we have seen now for dividend, we have to give disclosure, okay, in the notes, okay. So that will also be termed as non-adjusting event. Next, confirmation of the amount of damages awarded to an employee who sued for unfair dismissal after being sacked 2 months before the year end. That they are talking about compensation here. So whether this is adjusting or non-adjusting?
Adjusting.
Yes, this is adjusting. So which one will be the correct answer? They have asked about which event? They have asked about non-adjusting event. So non-adjusting event is 1 and 3.
3.
So 1 and 3, B will be the correct answer. Okay. So that is about all this that much is about the lesson only. No more details are given because it's only here we have to understand what comes under adjusting event, what comes under non-adjusting event. Okay. And that has been very well explained with the help of examples. Okay.
Yes, ma'am.
Yeah. So just check this out and sir will continue with the other classes. Okay, Umayya?
Okay, thank you, ma'am.
Thank you.